Good afternoon, everyone. This is Michael Venezia. I am the head of the Equity Trading Division here at Tradeview Markets. This is my third and final webcast of this year, 2014. Before I go forwards, on behalf of myself and the rest of the Tradeview Markets team, both domestically and internationally, we would like to wish both our existing and our future clients happy holidays. And with that being said, I thank you once again for joining me. Before I get started, I would ask everybody, I hope everybody has watched the first and second webcast. The first webcast being what services and products both myself and my team are going to offer going forward in the new year. We're very excited about it. It's actually why we started these webcasts before the beginning, to get a good foundation so we get a running start into 2014. The two topics I am going to discuss today are on the Rhino report. My pattern has been writing a couple of articles at the end of the week, talking about them a little bit more in depth. I hope you also read the articles, a little bit more of a foundation. So on the Rhino report on TradeviewMarkets.com, the last two articles I wrote are about candlestick patterns and trend trading. So I will start first with the candlestick patterns. As a trader for over 20 years in the business, I'm obviously familiar with the candlestick patterns, but one thing that traders do not like, and everybody has to get over, including myself, and I'm getting over this now, writing the article and doing this webcast, is that traders don't like change, but sometimes you have to change. And I'm going to change as well with the candlesticks, even though I use predominantly bar charts of an open, high, low, and close. And really, that's the same thing that the candlestick theory are predicated upon. So I want everybody to get familiar with them. They're all over the place. You open up Investors Business Daily, you open up a lot of periodicals, they use candlesticks. So read the article. The time frames in the article are a little bit more condensed, a little bit more easier to read. But I wanted to use this specific chart, which is Las Vegas Sands, LVS, the casino stock, on a yearly basis, because I also wanted to get you guys familiar with our charting platform as well. So I'm really trying to kill two birds with one stone, but please be focused on the issue at hand, which is the candlestick patterns. So here I'm going to use the chart of LVS on a yearly basis, such as follows. Candlesticks. They represent the open, the high, and the close. We'll take this right here near my arrow. The main portion is called the body. The long, thin lines that tail up, that show up and below, are called the tails. Now, if a stock goes higher than the open as such, then a green candlestick is drawn. Long candlesticks, right here on the left, another one right here on the right in red, and the same one example I've been using in the middle, indicate big range from open to close. And really, that's, as traders, that's what I'm more interested in, because the longer the body, the bigger the range, the more price action, and hopefully the greater the volume as such. You can see Las Vegas, where my arrow here has a long body, and it's no surprising that on the bottom there was somewhat heavy volume. And we go to the right, such as the same in this body, heavy volume. So what else? Another attribute of candlestick trading are long versus short shadows. The upper shadow represents the high. The lower represents the low. So when you go to the article, and I get a little bit more detailed about it, I only use a couple of days time frame to make my point and to show you what the candlesticks are about. So go back there. You can get a book, read a book. There are many on candlesticks. The most important thing, whatever charting system you use, whether it's a bar chart, a line chart, or a candlestick chart, is you have to trust your charts. You cannot have any doubt. You have to get familiar with them. You have to trust them. You have to trust the points. You have to trust the prices. We don't have time to worry about if our charts are correct or not when we're trying to execute a trade. So get that down correctly. But what I am most familiar with the candlesticks are the doji pattern. And once again, I'll use the same chart, the yearly chart on Las Vegas Sands, symbol LVS on the New York Stock Exchange once again. And here's the doji. Right here where my arrow is. A doji is quite often found at the bottom and the top of trends, and thus considered a possible sign of reversal. Here we go. A doji, right here, is formed when the bottom and the top of the trends are equal. It is important to note that the doji pattern formation does not mean reversal, but indecision, usually meaning there's a battle between buyers and sellers. Sometimes a change of trend. As I said before, a small percentage of my portfolio is predicated upon swing trading, and this is why I get familiar with the doji pattern. So get familiar with the candlesticks. Also get familiar with open, high, low, and close, because these are basically the two predominant charting systems out there, and we will be using both going forward. The second article I wrote this week is on trend trading. I think everybody can identify, if they don't really know it already, it's really easy to identify different types of trends. The first type of trend I'll be talking about, per the article on the Rhino report, is an upwards trend. So what I will do is I will use Apple Computer, for example, everybody's favorite. Now Apple, going back from June of last year until, I don't know, the middle of November, as demonstrated in my line here, is in an upwards trend. Now until the trend is broken, which I'll discuss more in there, it is considered an upwards trend. Now conversely, I'll use the oil market, which, as we currently speak, is literally in a correction. Here this is the USO, the US Oil ETF traded fund. Here I built two channels, this going back until the middle of September, all the way until today. I drew a lower channel showing the downward trend. Now obviously I'll get more into this on the trend line is broken, even if the price falls to the previous low. So I think that you don't have to really read the business pages to know what the oil has been doing lately, but this is a good example of a downwards trend. And once again, I'll get way more specific about stocks, even in real time going forward, but please get familiar with this pattern. It's actually quite simple, but the more charts you look at, the better. Now we'll look at a sideways chart. We'll look at Microsoft. Everybody knows it, a lot of people trade it, including myself. A very thick stock, good trader. Once again, has a lot of good bodies, a lot of good candlesticks. So now here, we'll go to the yearly. I demonstrated how Microsoft has a sideways trend really for the last 4 months over the late spring until the summer. Now, this stopped being a sideways trend when Microsoft broke out with volume. You can look on it down here, so there must have been some sort of news event, earnings, whatever you want to call it. So this Microsoft being a sideways trend here broke out, thus becoming a bullish trend after that. So we use Apple as an upward trend. We use the USO, the US Oil Fund, as a downward trend. And so far we have Microsoft as a sideways trend. Those are the three basic, upwards, downwards, and sideways, but we're going to get more technical about trend trading, and this is really where we make a good deal of the money, because the next three trends I talk about, we have a little bit more confirmation, and therefore more confidence to enter the trade, whether it works or not. The next one I'm going to use is a trend line broken. This is JD.com, the Chinese retailer, symbol JD on the New York Stock Exchange. I started trading this because it's a decent trader, and it's been pretty decent. I've been a pretty decent trader lately with the recent IPO of Alibaba. So now here, I draw the trend lines beforehand. Now you can see that the trend line is broken. The stock is in a downtrend, per se, by these two lines. Now, this red candlestick here showed a little bit of a break in trend, the downtrend. It had a little bit of volume. The stock came back and retested the downtrend line, then broke out from there. I wasn't in the trade. I didn't know how far it was going to go. I was aware of it. But that is a good example of a trend line that's broken. This channel is done. The stock based a little bit, and it went up from there. Please get familiar with this one. When a trend line is broken, the trades and the profits get a little bit meatier. I think it's a very good example. But I also use another example about how the price falls below their prior low. And I will use probably one of the hottest sectors out there trading-wise. That's the XLE, the energy sector. Now here, until the middle of July, oil was at $100 a barrel, and the XLE was in a tremendous bullish pattern. Here you go with the trend, the uptrend. Now here, where you see this red candlestick, two red candlesticks actually, the XLE failed to take out a new high, tested the channel, then the price fell below, right here, below the prior low, right there. Now that is an indication that the trend could change, and once again, had the stock been that get above here, represented a failure in confirmation, thus continuing the downtrend. Now obviously this is in hindsight. I was in the trade, I was a little bit late to it. Right here I wanted confirmation, but that is a great example of the XLE and the New York Stock Exchange, how a price falls below the prior low. Now the last trend trading example I'd like to give also via my article is a retest failure. I'll use a New York Stock Exchange semiconductor stock called Freescale Semiconductor. Trades with Micron Technology. Here I use a yearly chart, symbol FSL. Now you can see that this break here with volume, I always kept a note of. Because not only was there material news, the stock was in a tremendous bull run going from 16 to 24 in a 2-month span. And once that red bar, that red candlestick hit, Freescale Semiconductor tried to retest and have this downtrend here. It did that multiple times, 3 times actually, 3 times I like, and then it failed. That was a failure on Freescale Semiconductor. And as you can see, the stock went from $24 to $18 in about a week with heavy volume as indicated on the bottom. These trend charts that I showed you as well as the candlesticks are something that we're all going to have to get familiar with. You know, when I look at a chart, the longer the chart goes, the better. I consider it like a doctor looking at an x-ray. I know it's history. I love to see where it's going. I do have a good indication. And once again, I need confirmation and also to stick with the trend. But these trends are very important. And I want everybody to have this foundation besides fundamentals because we're going to get way more intense real-time trading. I'll be doing more in my morning, afternoon, and closing meetings. So once again, I was adamant about getting our fundamentals down. So when it comes time for more frequent webcasts and more serious trading, I want everybody also to get familiar with not only their charting pattern, their charting platform, but these charting patterns. So, as I said, this is our final webcast of the year. I will have a couple more articles coming out on the Ryan Report, as well as another article that I'm writing for forexmagnets.com, and that is on volume. Now, I definitely urge everybody to read that article because it is literally the most important fundamental topic I can preach, volume. You're going to get sick of hearing it. I'm going to get sick of saying it, but it's going to work because volume tells the story. So read the article coming out on Forex Magnet. I'll put it out on the Ryan Report. One of my top traders, Rory, is also going to be writing an article on the January effect, something that's going to happen, or at least, I don't know if it's going to come to fruition, but everybody is familiar with this going forward in January. So once again, we'd like to thank everybody for tuning in for our first 3 webcasts. We have great things planned going forward for the new year. I'm excited. I hope everybody plans on growing with us. So please, everybody have a happy holiday. Thank you for staying tuned. Do your homework and stay tuned for the next webcast at the Rhino Report. Thank you.